The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Brian, this morning I'm fortunate to be joined by our man Basil Chapman filling in for Tom. Basil, good morning. I think we got him now. Basil, you there?
I'm here. Can you hear me?
I got you loud and clear. Perfect. Good Monday morning.
Good. So we're looking at a very interesting market here, huh?
We might have a few things to talk about this hour, Basil. We sure do. To sum it up, folks, we got right now, we're at lows across the board. The Dow off 541 points, trading at 25,943. S&P's negative by 62 points. That's a solid 2.1%, trading at 2870. NASDAQ leading the way. NASDAQ off 2.7%, off 216 points, trading at 7787. And the Russell negative 35 points, or 2.2%. 1498. Quite a run. You jump over to the VIX this morning. We have the VIX trading at 2158. Quite a volatility spike in that market. And just to jump around, Basil, before we start off the conversation, I mean, to really sum up, of course, we have some trade escalation. You have President Trump tweeting at China in terms of their currency, and the yuan hitting 7 to 1 U.S. dollar. You have the yuan weakening. The president not happy about that. That's kind of a little bit of China retaliation in terms of our trades going on additional products in the U.S., but nonetheless, taking a look at some of the tech stocks, NVIDIA down 5.4% as you have some of those chip stocks. AMD down 4.3%. Even Apple off 4% as that's at lows as well. And it's not stopping in terms of hitting everything out there. Amazon down 2.57%. So Basil, it's pretty much across the board this morning in terms of what's getting hit, everything, and things just kind of escalating. We were down about 380 points coming into the market this morning, and things escalating from there, right?
So there are a couple of things that I'm looking at just as we're speaking exactly right now. On the left side, you see this chart on the left here. This is a daily chart of the E-mini. This is the S&P September futures, and trading down 59 at this particular point. There was a low that was made at 2871.50 on the 13th of June. Remember, June the 3rd was the day that we turned around from the 2732 low, and we went to 3,029.50 high.
Basil, just to jump in, I'm not sure we have your charts in the den, so I'm not able to see that just yet as well. Maybe if you could.
Oh, okay. Let me just do this.
Perfect.
Sorry, actually, all this time I thought the charts were showing. I guess they weren't. Yeah, they are going. It's easy enough. Click, click. There are the charts. We're coming up. There it is. So the chart, if you can see it, can you see it?
Maybe it's taking its sweet time.
It should be there.
Yeah, I don't think we have it yet, Basil.
Oh, that's no.
They got the gremlins in the computers when the Dow's down 540 points, man. They're not going to let us see all those peaks that market's coming off.
No, we want to see this. This is so important. All right, let me see. Maybe I'll do it again. Let me get out of this. Click. I'm going to click again because this is so important.
I think that's going to work. I think that's going to work. I saw your camera go off. We're going to see it go back on, hopefully.
Okay, I hope this is working. Here we go. Oh, I see what's going on here. Let's see if I can get this. Are you able to see a chart right now?
No, that's all right, Basil. Why don't we jump off? We got a few minutes. We'll pull it up at the break. But just talk to me if you could, and I could jump over what you were looking at. Yeah.
There's been a very large arch formation. And there was, from the low that was made on June the 13th, there was a straight up move from 2732 in the futures to 2915, and then a couple of days of pullback. And then that pullback that came from the high of the 11th of June, just 2 days, that low of 2871.50 is where we were just a moment ago. Right now we're at 2871. We did dip down to 2869.25. And then there's a 200-period moving average support level of 2858. I'm looking at a daily chart.
Okay.
So this is really a very important very short term, I'm talking near term, I'm talking about intraday, this is a very important moment where if there is some support after all that intense selling that's just gone on since the 2 days after the high that was made, we really started on the 30th of December with a big red candle. We've had 4 big red candles to the downside extending into today. So this is really a very important moment because the MACD and stochastic are still very poor. So this is what I'm thinking is the chance for an intraday pop to the upside.
Okay.
So that's what I wanted to show. So I thought I'd let you know because it's
nice,
live.
yeah.
We wanted to do that right in real time so that people could know. One of my big concerns is that the weekly chart is now starting to deteriorate for the first time. And that makes me much more cautious. One of the reasons why for subscribers, we are really looking at the short side. We increased our position in the Dow. We actually were very lucky to get Dow short, start the short position 7 points from the all-time high. And we've remained in that position and added to that. So this is going to be pretty important what happens next, because this week we're including Dow, S&P, NDX 100, the XLK, that is the Select Spider Tech Sector ETF, and their semiconductor index, because these weekly charts are right on the cusp. If it's a very bad week, that means my weekly charts have gone to a sell signal for the very first time in a long time.
Yeah, and it is across the board. Just remarkable moves, man. I was out of the office for a couple days towards the end of last week, and, man, I missed the beginning of this slide in terms of even the NASDAQ 100. You look at that, it was above 8,000. You're talking about on Thursday, I believe, and we're now we just dipped our head below 7,500. You're talking about 500 NASDAQ 100 points on an 8,000 point index.
That is really quite something.
It is. And just to jump over, folks, again, those stocks, I mean, Apple, quite a hit there, down 4%. You're looking at it, and I have it on a weekly, but just let's take it down on a 5-minute because it's not stopping. It closed on Friday at about 204. We opened, Basil, above 198, and we just actually made a low of 195.33. We're getting a little bit of a pop in the markets.
So let me just tell you that in my charts, on a daily basis, the low of the 25th of June at 195.29, shooting all the way to 221 on July the 31st. Look how quickly we've come down in Apple, and today's low is 195.13. We're right, that's what I was saying.
Yes.
That as we were speaking, so many charts have given back very quickly. Price moves to the upside that we thought were pretty good.
Yes.
But in 4 days, we've given everything back, going all the way back to some cases mid-June. That's not such a good sign.
Yeah, I mean, that's I'm just getting my chart. So Apple, when they came out with their earnings, I mean, you have that thing spike above 220, and we're now $25. You're now more than 10% off of where Apple was trading at on Wednesday. 10% for one of the biggest companies in the whole country, just 10% haircut. That
was the point. You just made the point that this is to move these companies, and the dollar amount to move these companies is huge.
Yes.
To go from, in this case, Apple from 221 to 195 in just 4 days. That's a lot of selling.
It is, man. And speaking of a lot of selling or a lot of buying, how about the yield, Basil? I'm just going to jump over to the chart real quick. The 10-year, right? 1.75%, jumping around that number today. Again, we were just sitting at 2% last week, let alone we were at 3.2% in October of last year. 1.75. I had to do a double take on that number as I really hadn't taken a peek on Friday. All right, folks, Basil and I coming back in 3 minutes. Come on back.
I'll try to get my charts.
There we go.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Tommy O'Brien, joined by our man Basil Chapman this morning. We got markets in negative territory. Dow off about 501, S&P off 57, NASDAQ off 199. You got all those markets off about 1.9 to 2.5%. And Basil, I know we got your charts kicking in the den and, of course, live on Tiger TV. And I see you got the TLT. We're going to talk some bonds.
The TLT, yes. So this is gapped up. This, folks, is a price point. You can see that's a little plus sign that I usually put on when we get to a leg D, but that is a price point right there. Look at that gap. So this is going to be very interesting because to gap up like this in leg D, with the MACD, the moving average convergence divergence still strong and the stochastic up at 95%, it tells me that there could be a pullback, but the pullback is still got very good support, which means that yields could remain low. So this is very important. And we've got a leg D in the weekly chart, which we cycle to the upside. And look at this monthly chart. Doing nothing, 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 and then look at that beautiful. I love to talk about arches and cup formations. Look at this cup formation right here from the high of July of 2000 and what was that? 16. That 143.62 goes down to 111.90, comes right back. And we're trading at 138.41. What were you going to say about the yields?
No, just that I saw you had it up there. I mean, just a remarkable move, man. I had to do a double take this morning just because I had seen what the market was doing, of course, last week. I was off Thursday and Friday. I saw what the market was doing. I hadn't kept my eye on the yield. And I saw a 1.74 number this morning, and I said, whoa, what did I miss from Thursday, man? I thought we were at
that was an incredible
2%,
move, yes.
0.25%. And that's after you had the Fed cutting on Wednesday. You know, in terms of it held kind of steady at 2, and then that number declining from 2 to 1.76. Just huge moves, and that explains the, of course, higher rises on the price of the yield that you have up there. Yeah.
Right, and if you're talking about the dollar, you know, talking about, I like to talk about D's in the Chapman wave methodology, going to the fourth highest peak. Look, we finally in the monthly chart went to leg D. and it's right up against resistance in the monthly chart. So this is going to be very interesting because you saw gold move up very sharply, even today. Look at that very strong leg going to the outer boundary level. Actually, it's gone above the sideways trading range from 1455 back in the 25th of May to the low of 1384 a few days later. Stayed within that trading band for a long time, and now it's bumping up against the resistance. Now the weekly chart has gone to a leg D. It's so interesting that, look, leg D in the monthly chart, and we saw the same thing in the dollar. This is so unusual historically to have them both traveling so sharply in the same direction. To have gold and the dollar, usually they work in counterpoint, and they're just like I always say, in a year you'll see 3 to 5 weeks periodically where they might go in the same direction, but mostly they're not percentage-wise, but direction-wise, they can go in opposites most of the time, and this is very unusual. So now is this the chance where the Fed, without saying anything, or maybe the administration, I don't know if it would be the Fed, starts to see a weaker dollar at least for a little while? Would that suit them? Because look, this is a pretty big move. You had your cup formation in the daily chart. Look at this lovely, this beautiful measured move going from the high of the 23rd of May, 98.37 in the dollar index, down to a month later, June the 25th, 95.84, and then pop, it makes a new recovery high, multi-year high at 98.93 on the 1st of August. Pretty sharp move here, so I'm thinking it's back into consolidation. So maybe in a way you've got different parts of the whole structure. It's like a chessboard. You've got these little different players moving in these directions that might become much more important, because for the first time you've got the euro. Actually, look at this. It's a pretty big move. Broke resistance. Euro is up what is that? 0.08, up 0.78%, 0.75%. Hey, this is the biggest move it's had in quite a while. So in a sense, I'm looking at this and saying, is the administration somehow getting what they want, but there's some parts that are a little bit loose, kind of getting away from them? We won't know for a little while, but I think the parts of the puzzle are starting to say that this was a very necessary pullback or correction, very quick in the market. I would not like it to last too long. It can last maybe a little bit more in time. I don't want to see it go much deeper in price. But this is a very important moment, I think, all around for the different countries, because of the different currencies, because of the yields, the competition for the lowest yield. Yeah. And the dollar is telling us that maybe the administration might see a little bit of a lower dollar. That's what they're talking about, and it hasn't done it. But maybe now is a chance for the dollar to pull back a little bit.
And it's interesting in terms of how that ties in. Of course, you have the president this morning just after 8 a.m. I have the tweet up there in terms of President Trump saying China dropped the price of their currency to an almost historic low. It's called currency manipulation. So you have that accusation out there. As you have the yuan getting a 7 handle, the yuan trading above 7, making Chinese products cheaper. So that kind of an accusation by the president that they are retaliating. China, of course, out there saying that they are not denying that, and let's pull that headline up here, denying that it's devaluing its country's currency to counter the tariffs. That, of course, accusation to combat President Trump. So it's really interesting, Basil, as all those pieces fall into the pie, right, in terms of currencies now potentially being in the mix, because the U.S. is almost have tariffs now on all goods, so China can't compete with the same level of goods, vice versa. So maybe China's manipulating their currency. That's what the president's saying. Some people would disagree. Nonetheless, currency's in the mix, which should provide some volatility in that market for sure.
Yeah, and also, if you look at it in terms of China, their economy is really not doing well. So they don't have all that much leverage at this particular point.
Yes.
So I think they're going to have no choice but to use their currency. We've seen other countries do that periodically. Whether it's manipulation, hey, haven't we manipulated the dollar to move higher? I think it's a kind of a loaded word, but in fact, it's part of the economic structure for most governments. I mean, what else do they have? It's very important. And that and the yields.
No, go ahead.
I was just going to say, and yields have got away from them. There's, as I say, the competition for the lowest yield. You can't stop that until something very important happens.
Yeah, and those additional tariffs, of course, on Friday, 300 billion goods. And, one of the examples, those are a lot of consumer-facing goods. And you have a company out there like Kohl's today down 3.6%. So there's almost no escaping that. And the tariffs, man, that's a lot of prices, Basil, that the consumer is going to end up paying in terms of, I've seen statistics out there, over $1,000 price rises on the average family of four, because guess what, folks? You're talking about hundreds of billions of dollars of goods coming in the country. You're talking about 10 to 25% on those goods, just massive amounts. And those costs generally transferred right to the consumer. So you have a company like Kohl's hitting hard, as they're going to have to face higher prices, and they're going to have consumers facing higher prices, and you're down, even more than the market on a day that the market is down 2 to 2.5% across the board. Stay tuned, folks. Basil and I are going to be coming right back. We got the second half of the program coming up. We got the Dow right now down close to 500 points. NASDAQ down about 200 points. S&P's down about 60. Basil and I coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien, joined by Basil Chapman this morning. We got the markets hanging out at session lows. Dow off 540, S&P's off 62, NASDAQ off now 2.7%, 216 points. If you got any questions, folks, anything on your mind, give us a call, 877-927-6648. And Basil, I wanted to jump over to gold if we could to start it off. Man, it is just not stopping. We're talking about highs as we speak. Maybe we'll get 1,500 today, Basil. It's not out of the picture. I mean, we are seeing gold rock and roll. I'm going to pull up the live chart I have here. 1481 right now. Even from last night, we traded from about 1450. So you're talking about almost $32 from last night. And when you put this on a 15-minute chart, going back to Thursday, this chart on gold kind of correlating exactly to bonds as you have that yield slipping. Gold going from 1412, Basil, up to 1482. You're talking about $70 in the price of gold from in the last basically 48 hours of trading, at least. We're Thursday morning to Monday morning.
Sorry, Tommy. I have to tell you, it's faded out, but I do have the chart right here. And if, not sure how it's going to come back on. I know you're there.
Yes. Can you hear me now, Basil?
Now I can hear. Everything's good.
Okay.
Good.
And we got your chart. Perfect. So I was just going over, Basil, if you didn't hear the end of it, the remarkable run since Thursday. You know, I mean, even the $70 from 1412 about to 14 now 82 as we sit only in a couple of days.
Well, it's been one of the bigger moves, but we've seen the same sort of thing before, and that's been the characteristic of gold. And gold I like to think of it more as a fear trade, an international fear trade. It's not like, regular folks can actually push the price of gold up. Something has to happen very seriously to see moves like this, $20, $30, $40 in days, sometimes in hours. Something is there that is really important. And if you look at the chart, I've got this huge bull formation.
I see it.
It was kind of stuck for a little while, for a long time, and just the last 3 months, it's been trading above this downtrend line, very comfortably above the downtrend line. You can see the MACD, the moving average convergence divergence, is positive. It's not great, but it's good. But the stochastic is running sharply. It hasn't got to 80%. This is a monthly chart. If I was looking at the daily chart, I'd say, okay, these things happen. This is taken from September, the high of September of 2011. This is a continuous contract,
yes.
So the price would be different. But that was the high. My price is 2,054.
Okay.
It gets changed because it gets smoothed out.
Of course.
But coming down to the low that was made back on December the 15th, the price here I've got is 1143, but that's not the issue. The chart formation and the timing is exactly right. The price gets smoothed out because it's a continuous contract. But look at that. And then I drew this pattern that I always look at, which is the lowercase h goes to a lowercase m if it can't break significantly above the high. That's exactly what we did. One arch,
yes.
Second longer arch, didn't break above, didn't break below the major low of December of 2015. And the rule of thumb that I have is that if it takes out the high, the previous high of the arch, you got to be careful because you've raised the base of support. I did not, because for subscribers, we've been long the dollar since April of 2018. My mind was kind of focused more on the dollar. The chart itself was saying, hey, this is very good, very good. So I kind of missed out for subscribers going into the long position of the of any of the goals. And that's a shame because this is really a very unusual move. It's a move that you can see from the chart. You see it very seldom.
Yes. And
not only that, when you do see it, it says, be careful, because I like to tie it together with the XLF and so forth. That's the financial S&P Select Spider Financial Fund. And that's come down pretty sharply from just under 28 was at 70, it was at 28.72 just on the 29th. Now the low today is already 26.89. So I'm watching this because very often when you get some kind of scare in the financial area, you see that gold responds very positively.
Sure.
So this is what I'm watching very closely because, as I said, here we are, leg D in the weekly chart. Got to watch that. Monthly chart is still looking pretty good, but there are ramifications here that I don't think we can just treat as just a one-off, that it's just a couple of days and it's done. I think this is going to go on for a little while. The whole thing is, does the June low, and that's the big question for me, does that low hold? And I try to hold at least a small position of our long-term, more intermediate term that we got at the exact low of the Dow. We bought that on June the 3rd, but now we're down only short positions on the Dow now because this move is impacting in any of the charts. If I go to the S&P, you'll see the S&P on a weekly basis underneath the 14-period moving average for the first time since it broke above it back in June. So you've got to take this seriously. The MACD turned down, stochastic turned down. I can go through all the different charts. And the other thing that we got to keep an eye on is crude oil.
Yes.
Crude oil's down 85 cents. It hasn't rallied. I think there was another tanker that was taken hostage.
I hadn't heard that.
Affected. It hasn't affected crude oil. Crude oil's down 84 cents at 54.81. And I always like to look at crude oil. In a sense, it's like the transportation index. I like both of those to be moving up with the Dow making highs. This has got nothing really to do with Dow theory. Just to say, if the economy is strong, it means you're using oil. So you want to see oil moving up decently. You don't want to see it get carried away. But now it's stuck in this low ridge. It hasn't broken down. It will break down if it takes out 52, and it's at 54.84 right now.
Okay.
So far, it's just hinting that crude oil, at least for now, is you got to keep an eye on that.
Yeah, and that gold consolidation, man, to pull it back as well. I'm just going to jump to my chart even because, and of course, Tom talks about it a lot with his gold report. You know, he just published that 900th issue. This consolidation, even if you just go back, Basil, right, to kind of the 6-year highs, you're talking about a consolidation that's taken from almost the beginning, or call it the middle of 2012, so 6 solid years of, I know you like those boxes, right? You draw those boxes in terms of where it can be. You don't need to be a technician, folks, to draw that box around those 6 years of the gold price.
Just draw it on this monthly chart, and you'll see what's happened. We are now approaching the high of the box. And the high of the box says that the high that was made at that peak A minus, that rally that failed back in August of 2013, that's the date and that's the chart. I'll give you the price because it's the continuous contract. At that time, that wasn't the price. Right now, the price is 1538.3. So we'll use the most current price. That would be the upside target here because it's taken so much time in this rectangle to fill the rectangle, then to break out from the resistance. That was the resistance from back in July of 2016 at 1470. And this is a very important move. And look at these 3 very strong green candles.
Huge.
And the MACD. And look at the moving averages. The 9-period moving averages as cross positively above the 14-period black moving average. So far, that's just saying you've got very strong support in gold in that whole area, the breakout area, and we can just call it in the low 1400s. Should be strong support.
I would agree. And man, those monthlies, when you put it on those monthlies, those 3 bars that we just finished up, folks, I mean, you're talking about mammoth moves. All right, folks, come on back. Basil and I will be back in 3 minutes. 877-927-6648. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tommy O'Brien with Basil Chapman. We got quite a day in the markets as we're sliding to new low territory. Right now, you got the Dow off 587 points, 2.2% in the negative. S&P is negative by 67, that's 2.3%, and the NASDAQ is now approaching 3% in the negative, off 235 points, and the Russell, same deal, off about 2.7%, minus 40 points. I'm just going to jump over to the VIX quick, Basil. As you would expect, volatility index, putting this on a shorter time frame. VIX now above, well, it was above 22, 21.73 when this run began on Thursday. You had the VIX at 14. So as you would expect, anytime you have a trade war ramping up, you could potentially have a currency war ramping up, and the market's down substantially. That VIX getting a bit of a pop this morning so far. So what else are you looking at this morning, Basil, to start off the trading week?
Let me just show you the VIX you mentioned.
Fantastic,
the VIX is approaching the 23.38 level. That was tariffs, rates, market uncertainty. That was the week of the 10th of May.
Okay.
It popped up to 23.38, but then it closed the week sharply lower. Last week on Friday, we closed way above the 200-period moving average in the weekly chart, this orange line. That says to me that the VIX is in play. And what's really important is that every rally this morning has been just a tiny little bit of a rally. You could barely call it a rally. And then we made lower lows. So this makes the coming hour even more important than this first hour that we were talking about, at least the hour 10 o'clock, half hour, 10 o'clock to 10:30 Eastern time when we came on, where I said that 2871 area in the E-mini was important. So what I wanted to show you is that VIX is in play. That's really important. The other thing that really, over the weekend, I showed subscribers to my opening call. I said, you know, I'm concerned about this. This is the XLK, the S&P Select Tiger Spider Fund. The monthly chart was just really beautiful going into the end of the month, end of July. It looked really good. The weekly chart did go to a leg C, and now it's at a peak C. And C says it should at some point go to D. And the big question for me, and I spent some time on it over the weekend, is are we going to take out the XLK low, which is trading at 76.28? The June low, week of the 7th of June, it hits 70.15. Well, 70.15 is another 10% lower from here. So this is going to be very important because everything about it, it matches all the other indexes. The other indexes have D, E, or even an F, which in the chart wave says, okay, now you're ready for some kind of a pullback. So this is the only one that isn't there. So it's saying to me, keep in mind that this one usually performs the way I like it to, going to a D in the Chapman wave methodology in the weekly chart. But at all-time highs to failure to peak C would be very unusual. So that says to me, at some point within the next 2 weeks, something should be said, something should be done, should find some support between maybe the 75 to 73 area. At this stage, wow, look at that move down. Look at the speed of the daily. And I had a left side, right side price time match that I thought would go until the 8th, I think it was, 9th of this month. No, today broke the support on the left side. And this is speed. And a lot of people are getting out very quickly. And that says to me that if there is any sense of something said, something's done, something that's positive, does the market respond as it's done what it's done now since the December low, the June low? Does it have this massive turnaround, or is this going to be a stumble and fumble for a while? And my looking at this says from the impact from where we are in the weekly technicals on all the indexes that I look at. Look at the QQQ, which had an all-time high just over a week ago at 195.5. At a leg D, goes to a peak D in the weekly chart. MACD is turned down. Stochastic still good at 84%. Wow, it's going to be such an important week, because if this starts to break down, these weekly charts don't just reverse suddenly from Ds and Es. They take quite a while. So I've got a lot of respect for this. One of the reasons why I raised the stops on any of our long positions, we actually now have very few long positions, and we do have the shorts. So this is going to be really important, because it's at this juncture in this particular pattern in the weekly charts that says a break of the most recent left side low would be very important. And in this case, in the QQQ, the NDX 100 trading vehicle, 169.27 was the low. That's a long way down, but I'm just giving you the numbers. That's all I'm saying.
No, I mean, it is a long way down, right? But anytime we talked about it, I mean, you got Apple down almost 10% in the span of, you're talking about almost, what was it, 48? Yeah, 48 trading hours in terms of they come out with their earnings. They spiked to 221, and then you have the stock trading at 195. Folks, that's a $26 haircut, which is more than 10% for a $221 stock. And of course, Apple going to have a huge impact in there, but you also have, you know, the likes of just even AMD. Look at that run. We go from 34.30. I just pulled up a 5-day, and you're trading at under $28. NVIDIA, right, down 6% today alone. You were just trading at 176. We're now trading at 150. Just mammoth moves. So if this continues, mammoth moves are definitely, this is a volatile sector, as we all know. NASDAQ 100, quite a number, and these markets just not stopping, Basil, as we see it. You got the Dow off more than 600 right now about, and the NASDAQ off about 3% for the entire index.
I do think you pinpointed exactly what we've got to be looking at, because the semiconductors are really important geopolitically, economically,
yes,
just in every medium, automobiles, whatever you're looking at.
Definitely.
So the fact that you mentioned NVIDIA and the fact you mentioned advanced micro devices, let's look at the SMHs. SMH right now is down 4.35 at 108.80, and it's had a really sharp. Now, I have mixed feelings about this, because we went short last week, and it depends where some subscribers were lucky. They got, I said, at a particular level, and as it got to that level, it actually continued higher. So as they got in, they got a higher price, and I had a very strict 2-point stop. So I always like to be very strict. So technically we're out of it, but I know a lot of subscribers were lucky enough that the stop wasn't hit, and they still short from 118 area, trading down at 108. That's 10 points. But look at this. There's your D once again, and what I'd spent time on my show, the Tiger Technicians Hour, is talking about this up channel, this tiny little up channel that I call the Chapman Wave inside track. You can see whenever prices got into this area, that's where it was most vulnerable.
Yeah.
And I always look at a leg D going to a peak D as being very important. There we are, peak D at 123.56 in the SMHs, the semiconductor index, and it goes from 123.56 to the low right now of 108. 5.81. This is something that's really important, and that monthly chart, so far I'm still calling this a leg B. I do not want to see these break down very much further, these monthly charts, because they'd improve so much. This is going to be an important moment, and I'm comparing this to a very deep breath that the market's taking that I think is going to take some time and some price. So that's where we are.
Yeah, I mean, critical day when you got all the indices now down more than 2.2%. We'll see if we can kind of stem some of that pain in the coming days, or if it can escalate, as we've seen it do maybe in the past, even last few months. Come on back, folks. Basil and I back in 3 minutes.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien, joined by Basil Chapman this morning. We got markets right near session lows with all the indices down between about 2.2% and 2.8%. The Dow off about 575 points right now. So, Basil, I just wanted to give you a quick plug, of course, for your great newsletter you do. Folks, check it out right on the front page at TFNN.com. The Opening Call, Basil's great trading service. He sent out a great update on Saturday I was checking out. He has action on the weekends and every morning, of course, sending out his update for subscribers with the daily charts and commentary. And when you do sign up, you'll have a number.
Suddenly we had a little
Say it again, Basil. Go ahead.
I got you back a little bit. Okay.
Okay, we got you. So when you also sign up, folks, you get 4 archived workshops that subscribers to the opening call game. So I encourage you to check that out. Basil, of course, will be back for his Tiger Technicians Hour at noon. So you can get signed up, check that out, and be listening to him. And with that in mind, Basil, what are you going to be jumping off to start things off with the Tiger Technicians Hour at noon?
So real quickly, just we're talking about 3 patterns I always look at: straight line, up or down, the arch formation, the cup formation, the lowercase h formation red, because if it takes out the left side low, it can go even lower. We've seen that this morning. And the green one, when you take out the left side high, you can go higher. So those are the patterns we look at.
Yes.
I'll show you them. Look right here, you've got the arch formation. There's the 200-period moving average right now on the E-mini, on the Dow, I'm sorry. That's at 25,851. That has to hold, otherwise there's a problem. And this is trend line, single line. Just one line can give you so much information. I'll be talking about these patterns this afternoon at noon. And you can see that this has to hold. It's really important on the weekly chart.
We're really close to those has to hold. I mean, you have the Dow down, what, 576, almost 600, and you're within 50 to 60 points of that low. So we'll see what happens.
Yes.
We got gold at 1481. There's a chance we could get 1500 today. We'll see.
Yep.
Basil, thanks so much for filling in. Always a pleasure, man.
Thank you, Tommy. Thank you very much.
My
indeed.
pleasure. We look forward to the show at noon. Folks, big day in the markets. Stay tuned. Live programming all day at TFNN. Have a great Monday.